Porter's Five Forces analysis. Porter's Five Forces is a framework developed by Michael Porter with the aim of analyzing the competitive dynamics within an industry. This framework provides a structured approach to understanding the competitive forces that shape an industry's attractiveness and profitability. The five forces that comprise this framework include the threat of new entrants, the bargaining power of buyers and suppliers, the threat of substitute products or services, and the intensity of competitive rivalry. Although it is traditionally applied to strategic management and business strategy, the framework can also be adapted to the context of financial statement analysis to assess the underlying factors that influence a company's financial performance. Use of Porter's Five Forces in FSA. In FSA, the framework of Porter's Five Forces serves as a valuable tool for evaluating the competitive environment in which a company operates. By examining each force concerning the company's financial performance, analysts can gain insights into the factors influencing its profitability, risk, and long-term sustainability. The threat of new entrants represents the potential for new competitors to enter the market and disrupt existing players. In the context of financial statement analysis, this force can be evaluated by assessing barriers to entry such as economies of scale, capital requirements, regulatory hurdles, and brand loyalty. A company facing low barriers to entry may experience increased competition, leading to pricing pressures and lower profitability. Analysts examine financial statements to identify trends indicative of heightened competition or declining market share, which could signal a higher threat of new entrants. The bargaining power of buyers refers to the ability of customers to influence pricing and terms of sale. In financial statement analysis, this force is reflected in metrics such as customer concentration, pricing trends, and customer satisfaction levels. A company with a diverse customer base and strong brand loyalty may have greater leverage in negotiating prices and terms, resulting in higher profitability. Conversely, a company with a few influential customers or facing intense price competition may experience downward pressure on margins. By analyzing financial statements, analysts can assess the extent to which buyers' bargaining power influences a company's profitability. The bargaining power of suppliers measures suppliers' ability to control input prices or supply disruptions. Financial statement analysis can evaluate this force by examining cost structures, supplier concentration, and dependency on critical inputs. Companies reliant on a single supplier or facing limited alternative sources may be vulnerable to supply chain risks, which can impact profitability and operational stability. By analyzing financial statements, analysts can identify trends in input costs or supplier relationships that may pose risks to the company's financial performance. The threat of substitute products or services assesses the availability of alternatives that satisfy customer needs. In FSA, this force can be gauged by examining product differentiation, customer preferences, and industry trends. A company offering unique products or services with high customer switching costs may be less susceptible to substitutes and enjoy stronger pricing power. Conversely, companies operating in commoditized industries with low barriers to entry may face increased competition from substitutes, leading to margin erosion. By analyzing financial statements, analysts can evaluate how much the threat of substitute products or services influences the company's financial performance. The intensity of competitive rivalry reflects the degree of competition among existing industry players. FSA can assess this force by examining market share dynamics, pricing pressures, and industry consolidation trends. Companies operating in highly competitive markets may experience margin compression and heightened volatility in financial performance. By analyzing financial statements, analysts can identify any patterns of competitive behavior or market dynamics that may impact the company's profitability and long-term growth prospects. Conclusion: Porter's 5 forces analysis is an essential tool in FSA for understanding the competitive dynamics within an industry. By examining the threat of new entrants, the bargaining power of buyers and suppliers, the threat of substitute products, and the intensity of competitive rivalry, analysts can gauge the attractiveness and profitability potential of an industry. This framework helps in identifying strategic opportunities and risks, guiding investment decisions, and formulating competitive strategies. Integrating Porter's analysis with FSA provides a comprehensive view of a company's strategic positioning and its financial health, enabling stakeholders to make informed decisions. Quiz. Welcome to the external analysis quiz. To test your knowledge, please select the correct answer for each question.